What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at Palantir stock, ticker symbol PLTR, on a variety of time frames in anticipation of the next trading day, Monday, May 20th. All right, guys, Palantir stock here from Friday. It finished the day up 11 cents per share. That's plus basically half of 1%, 0.51% in regular trading hours, basically flat in the after hours. Let's take a look here. Let's pull out everything we possibly can as we head into now tomorrow, Monday, and really get prepped for tomorrow's trading day. We're, of course, going to pull out any directional bullish or bearish bias out of the volume profile. We'll look at the psychological levels that big money's watching, so we need to as well. The implied volatility, the expected move for tomorrow, and the directional bias coming out of the chain for tomorrow. So let's get started here with the volume profile analysis here on the 5-minute chart. Listen, guys, by the way, if you're new here or if you haven't done so already, Palantir is a daily upload, so I appreciate you subscribing to the channel. My goal here is 10,000, and I know we can hit it soon, but not without your help. So I appreciate you doing so, and I will keep the Palantir videos coming daily. Now listen, let's take a peek under the hood here and really see if we can pull out any directional bias from kind of beneath the waves, right? Underneath the movement that occurred on Friday. So this is really interesting. Now, we had a very normal open and then a quick fade, okay? Then what we, in volume, right? What we saw in the stock movement then is a pop and quick fade. In the volume, it's eerily similar. A pop in volume and then kind of a quick fade. This, to me, even though that peak is green, that to me is the only outlying candle, right? Is the big green bar. And I'm looking for usually consecutive outliers that offset the other side. In this case, it's far too similar. We see a pop on the green side, still elevated volume on the red side, and then it fades off. Okay, we have, another kind of random green pop there. Fine. It's not extreme enough for me to assign anything, which is, I think, a little disappointing looking at this with a bullish perspective, because that was such an aggressive upside move. But listen, bears, you guys didn't really win that battle either. You brought the price back down, but in the volume profile, there was no tremendous bearish bias either. Then as we move through the day, it's not enough. One thing I will point out, first of all, this, not enough, right? That's way too much of a risk of fooled by randomness. But through this region here, it's not tremendous. It's not even average bias. I would say a very slight amount of bearish bias, because we're seeing quite a few consecutive red bars on a relatively sustained downside move off that 9 EMA, the yellow line. And the volume is, on average, quite a bit higher than those lower volume green bars that occur periodically. Fine. Okay, but then moving into the close, we see a pop in volume, very normal, and then a rebalancing bar. I tend to ignore that one immediately after the bell. It's just funds and institutions rebalancing, and it's typically done by algorithms. So it's interesting. It was only a 0.5% green day, so you don't really expect to see tremendous bullish bias. But there really wasn't much at all. There was actually just a very slight amount of bearish bias, which is interesting. So let's move on, though. That's one factor of many. Let's take a look at the 30-minute chart. And we'll really round out with the self-fulfilling prophecy psychological levels that a lot of traders are going to be watching, that self-fulfilling prophecy, right? And a lot of big money is also paying attention to, so we need to as well. There's going to be a lot of decisions being made around these levels. And we will look at the 30-minute, the 4-hour, and the daily and keep them as simple as possible, right? So that white line, that's the 50 period. The gray line is the 200 period. The two most common indicators you're going to see on pretty much any chart. And then, of course, volume. So here on the 30-minute, guys, unfortunately here, you can see on Thursday, we barely held that 50 period. On Friday, we held it off the open. We gave it up, tested it right into the close, and we literally closed basically on top of that 50 period, guys. From there, I tend to ignore after-hours movement in terms of the moving averages, because the moving averages keep moving, and the stock movement is on such low volume. To me, it's not a good indication anyway. So that 50 period is very much so up in the air for both bulls and bears come tomorrow, Monday. here's what I'm looking for. Bears. You want to see that act as a hard resistance. You want to reject off that thing, and if we test it more than once, continue to reject on high volume. Doing so could set you guys up for a near-term downside test of that 200 period. Bulls. Get through it. Okay, just clear it, because we're kind of like sitting just below it, at least as of the close. It's kind of like on top, if not a little below, right? Like a penny I'm talking about. Just get through, clear upside the 50 period, retest it, ideally on low volume, a small sample size betting on the retreat back downside, and then boom, upon the test, you get a high volume bounce away from that level to confirm it as short-term support. That's ideal for bulls. Now, let's move on here to the 4-hour chart and take a look. You guys can see here that on Friday, we reclaimed the 50 period. But again, we closed kind of right on top of it. Let me actually zoom in so we can get a better view of this. We kind of closed right on top of it, guys. This is very similar to the 30-minute. This is so up in the air. Okay, but you can also see this 50 period starting to curl downside. Bulls, I like it to be either flat or ascending. Whereas bears, that thing curling downside, that's ideal for you, but only if you can reclaim it as resistance. So bulls, if you're a bull, I want to see that 50 period hold as hard support tomorrow. In doing so, that could open you bulls up for a near-term test of the 200 period, that gray line here on the 4-hour, whereas bears, it's in position. You just need to reclaim it as hard resistance and actually treat it as such. Get beneath it, right? Retest it and reject hard. Claim the 50 period as resistance is the bear's primary focus, I would say, at least on the 4-hour chart here tomorrow. Now the daily, okay? You can see here, guys, that, you know, the 50-day moving average and the 200-day, they're kind of far away to be immediate concerns. The story here on Palantir as of late has really been the story of 21 to 22. A $1 wide psychological whole dollar, right, kind of channel. Well, we tested above 22 on Friday and failed to get above there. Okay, you can see that wick. And if you go to like the 30-minute, you can see we clearly did that, right? Here's the story. Bulls, I think a hold of 22, get above and hold 22, is a big accomplishment. It might not seem like it's huge, right? But we've been struggling with that for a week, if not a couple of weeks now. Get above, hold 22 as support. That sets us up for an upside test of the 50-day moving average, which is like the real area that I'm looking at in the more midterm. Okay. Aside from that, the channel from 21 to 22 has kind of tightened up and become the channel between like 2150 and 22. So bulls ideally holding above 2150 would be great, whereas you bears, getting beneath 2150 is a good start. Ideally, breaking 21 to the downside is the ultimate goal here in the very near term if you're a bear. Implied volatility, particularly important if you're trading options. Compared to the last 3 months, it's in the very low range. So in terms of buying calls or puts, you're paying very little Vega value up front right now compared to the last 3 months, which is good, right? You want to pay as little as you can up front. Vega, of course, is priced into those. So when that's low, it can potentially be a good time to buy options, assuming you have a strong directional bias. Okay. Now, the expected move. Okay, we have weekly expiration, so we have to do a little bit of educated guesswork, which is kind of a lot of what trading is, realistically. The next expiration we have is May 24th. Okay, that's Friday's close. The expected move by Friday's close compared to this last Friday's close is plus or minus $1.02 per share. So how do we get tomorrow? Well, we divide that by 5 trading days, but that assumes 5 green days or 5 red days. So we add back, in this market, I'm adding back 50%. That seems to be working the best. That gives us a plus or minus expected move by tomorrow's close of 31 cents per share, approximately. So that's the approximate 1 standard deviation expected volatility, right, for tomorrow's trading day. That's important to know because that gives you a baseline. And then what you do is you look at that and you say, okay, do I agree or disagree? And then that bias, along with the directional bias, helps you much more effectively position yourself using options. Now, you're probably saying, well, what about directional bias? Come down here to the volume. We have 276,000 total contracts that were traded on Friday. Of those, 198,000 calls, 79,000 puts. Relatively heavy call side bias on the overall call put ratio, right? Break it down by time frame. The short-term speculators, the 0 to 20 delta range, 69,000 calls, 33,000 puts. Volume's not huge, so take it with a grain of salt, okay? But still a call side bias out of the short-term speculators as well. Listen, guys, again, if you're getting value out of the daily Palantir uploads, I ask you to do one thing. It's the best thing you can do for the channel, and it's free. Leave a like on the video, and then get out of here and enjoy your day. I appreciate it, and I'll see you in the next one.